The Federal Reserve cutting a key interest rate by 1/4 percentage point for the second time in a row, this time admitting there was dissent from several governors, those who thought it should be bigger and those who thought 1/4 percentage point was just right. Scripps News national correspondent Tony Waterman joins us now. And Tony, the Fed giving several reasons for their decision. The bottom line seems to be the economy, though, is slowing.
Yeah, that's right, Del. This press conference with the Federal Reserve head, Jerome Powell, is still ongoing, but there are already a couple of key takeaways from this. The first one being that another rate cut in December, something that the markets are kind of already pricing in at this point. Jerome Powell making it very clear that that is far from a foregone conclusion, saying that it's far from it. He really was trying to stress this in the press conference. He was also stressing that the Fed is in this challenging situation, in his words, and this is about their dual mandate. This is maximum employment, but also price stability, and both of those things right now, as you know, are moving in opposite directions, and that is making it very difficult for the Fed to know how to move forward. Which one do they sacrifice? Is it higher prices, or is it the weakness in the labor market? But Federal Reserve Chair Jerome Powell saying that he saw risks to the upside when it comes to inflation, and that some of this is tagged to those tariffs, President Trump's tariffs, and that we're already starting to see prices in some categories go higher. We've seen data in recent days showing that furniture and apparel prices are going up, and the expectation that businesses really in the first quarter of this of next year are going to increasingly pass those costs along to consumers. One thing we did not hear Jerome Powell say, at least not when I was listening, was the standard line that he always says, that we are going to listen to the data. Instead, what we were hearing him say is that we are going to listen to the incoming data, the available data. And of course, this is because there is a data blackout almost because of this government shutdown. A lot of the agencies that collect and analyze and distribute key economic indicators, things like the jobs report, inflation numbers, retail sales figures, that has practically come to a halt for the last month or so as the government's been shut down. So the Fed is kind of moving blindly here in a lot of ways. Powell was asked about this. He said he's relying on private sector data that's coming out, but it's really the government data that is most important when the Fed is making its decision. He said going forward, they will continue to rely on that private sector data. He said it will not be granular data, but they should be able to see if there are any major shifts in the economy, which could then impact their decision for the December meeting.
Yeah, the Fed getting the CPI, the Consumer Price Index report, but not the monthly jobs report because the government was shut down. So let's talk about the Board of Governors, the makeup, the new Board of Governors. The newest member is a Trump appointee who wanted a larger cut. Did the other members of the Fed board join him in his sentiments?
Well, this is now the third time in a row that there has been, the Fed decision has not been unanimous, which is extremely, extremely rare. This started back in July, but you're right, this time around, the dissent, interestingly enough, was in opposite directions. So you had Trump's newly appointed Fed governor, Stephen Miron, calling for a 50 basis point reduction, so a higher reduction in these interest rates. But you had Jeffrey Schmidt, who is the president of the Kansas City Fed, saying that interest rates shouldn't be cut at all, that they should stay exactly where they were at that 4 to 4.25% target range. He has a lot of concerns about inflation. He has talked about this in the past. And again, this is getting back to the Fed's dual mandate when it comes to keeping prices steady, but also making sure that the labor market is healthy. Those are moving in opposite directions right now, and it's causing a lot of conversation, a lot of discussions within the Fed board. And this is something that Powell also talked about in this press conference, saying that they're having sort of these heated exchanges about what's coming down the pipeline. And again, without the information at hand from the government, it makes it that much more complicated.
Scripps News national correspondent Tony Waterman for us. Tony, as always, we thank you.